Welcome back, folks. We got oil up 28 cents. How about that chart? I got it on a daily basis. You trade from $33 back in November. We've now eclipsed the highs that we had back in March, and we've been talking to our man Teddy Kekstadt for a while. He's got a $100 price tag in oil, let alone what's going on with the Forex market. Every trading day, folks, check out Teddy's work at forex-trading-unlock.com. We talk to Teddy every Wednesday at 40 past the hour. Teddy Kekstadt, good morning.
Hey, good to see you guys.
Good to see you too, man. So I think of you every day, man, when I see that oil creeping up. Quite the chart we got on a daily basis, man. Higher territory across the board. What I wanted to touch on real quick to start off, Teddy, we got CPI data out tomorrow morning with inflationary data, of course. You're all about Forex markets. When you look at something like CPI, how does that contribute to how you're looking at the markets for basically the whole spectrum of what we're about to talk about, the Forex industry?
Oh, CPI is one of the top 10 numbers of the month. That's the one nice thing about the CPI falls into the same numbers that interact with the bond market, which obviously is a function of currency pricing. So a number like CPI absolutely is a big variable. And the thing is that for a long time, like when things were really trucking along at a good pace, and everything is smooth, the number doesn't really have that much weight. Okay, but now in a situation where we're coming out of the pandemic, we're trying to get the economies going and stuff like that. We have rampant inflation. No one can contest that whatsoever, So now that number absolutely becomes a variable to watch. Like I'm definitely going to be watching out for that one tomorrow. Unemployment claims is another big one that comes out tomorrow, So absolutely, it's a big number to be paying attention to.
It's pretty surprising. We're talking to Kevin Hinks to start off the program. You can't deny the runs of bonds, just like you can't deny inflation,
right.
Man. I agree across the board. You can't deny what the run bonds have had to under 1.5% right now. The market seems pretty calm with all the inflationary talk. Even with, as I would agree, it's pretty obvious to anybody with two eyes that are open that those numbers are pretty staggering right now in terms of inflation. But the market is not too worried, man, as we persist, at least for the next few months. Always interesting how this market can stay in the current, because I imagine, things will change as they always do. But, man, that bond market under 1.5, as you say, where, inflation in my mind is just everywhere, even on wages. I talked about wages at the beginning and the non-farm payroll numbers. You start getting rising wages when you get big numbers on CPI, man. Not that it's scary, but it definitely points to inflationary and whether it might persist. Yeah.
Absolutely. Well, that's why, you go out and go get a burrito now, like if you get guacamole on the side, it's going to cost you $8, instead of $3, like literally.
It is. You got to chuckle, man. I agree. It's just staggering. I know. And I love my guacamole.
It's shocking. So, I don't, and that's the one thing, like, I don't know if you've noticed, but, when I go out now to places where I haven't, have been going to for years and stuff like that, besides seeing decreasing menus, I'm seeing the escalation in their pricing, where just in the past couple months, I'm like, okay, so I had the same thing just 3 months ago, and now the prices went up $5, on a meal. That's a big jump when you think about it.
And it is, and it makes sense, though. I just think, and this has taken me out of the market and just put me in just a regular person in the environment, like you're talking about, just, your experiences in life. If you're running a restaurant right now, Teddy, right, you know that if you're open, either people are coming or they're not, right? You're going to experience that increased demand. If you're experiencing, it's not even price gouging, it's just keeping up with the prices you're paying, right? I mean, I would be raising prices right now. People are going to be coming in. People probably aren't going to be staying home because a burger cost a couple extra dollars at a time when we've been trapped at home for a year. So it's just, it makes sense, man. Rising costs, you have rising wages, you have rising costs, you have rising demand, pent-up demand. It's an interesting conversation, man, and it's going to be persisting in a big way. We got the dollar index a little bit lower today. What are you looking at most in the Forex market this week, Teddy?
Well, most of all, actually, it's interesting. We started out with the oil and stuff like that. I'm watching the bond numbers. Those are the ones I think are going to have the biggest impact. So if you start to see the bonds go up, meaning down in rates, then I think you're going to see more pressure on the dollar. I think if you see a bond break, meaning higher rates, then all of a sudden dollar strength will creep into the market. Oddly enough, oil is now off the table. And here's the reason why oil is off the table now. We're hitting, once you hit the $70 to $75 a barrel, we already know that puts us into, if we were in a thriving economy, that starts to put us into a slowdown. Okay. So everyone's going out because everybody hasn't been able to go out. The question is, how long can the average person keep on going out over the summer? They're going to go out, have a couple trips, but unless you have money, I mean, gas costs 80% more than it did 6 months ago, at least in my area. I mean, literally. So now there's the restaurant prices. Now a family with, a couple kids, and now you got to realize as people go back to work, they weren't spending money when they were working from home if they were still working or if they were unemployed. If they spent money driving, it's because they went to the grocery store. It's not because they were commuting anywhere, So these things start to creep into the and I think that's why we have a sideways environment setting up right now with certain currencies like the pound and stuff like that. So oil is off the table, meaning that unless we have a big sell-off in oil, which is not happening, this is the pause where people are going out, money's being spent, but when that runs out of gas, that's when we have the next leg higher, meaning that the dollar is going to get crushed off of that one. So you're going to have a big divergence. Like, for instance, you look at the U.S. dollar yen that you guys like, okay? Yes. It's been trending higher, okay? It just came off a higher move high. We had it with the yen on Friday, a bearish engulfing line, counter trend sell signal, okay? But the thing is, all these other markets on Friday had trend signals that went against the dollar. So that means the momentum overall now is very bearish the dollar, and you're going to start seeing strength. Like you could start to see the yen actually get down back to 107, and I've been predicting a 113, 114 yen for a while. But now, because if this is true and oil starts to stagnate things, which it will, all of your viewers may not remember when George Bush was president going into the Obama term. When oil started getting to $75, $100 a barrel, everything started slowing down. That's when earnings started slowing down as well, because like you said, companies are charging more money for stuff because they're paying more for this stuff to produce their goods and services. Where's their profit margins going? And we know earnings drive the markets. So I think that we're going to start to hit the brake pretty soon. Now it's a lag. It's going to take 3 to 6 months to really see that in the numbers. But CPI, like you said, am I watching that number? Absolutely, every month for the next year for sure, because that's going to dictate currency movement. And I think you're going to see a dollar bear really come roaring up if we start to see oil continue to go higher and rates especially if they don't go higher rather.
Yeah, it's so interesting, man. I could spend 2 full shows talking about the CPI and just whether it's transitory, because in my head, man, it's really tough for me to imagine. Yes, we're in a somewhat transitory time, but I don't think we're in as transitory time as maybe the Fed would like us to believe. You know what I mean? As in, how do we see those prices really recoil back to a normal? Yes, there'll be some recoil, but there's a level of pent-up demand, and now we're seeing that wages come in there, and if you have rising wages, that's obviously going to contribute to at a time when you're spending that money on goods that cost more, and you're paying companies more, that then they have to go out and what do? They pay higher wages, right? So I don't know how that cycle breaks down really quickly. But man, it's a great time to be in the markets for sure.
Absolutely.
Teddy, that was a